Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
In this backdrop, let us invite Hiren Ved, Director and CIO of Alchemy Capital Management, and Anand Shah, Deputy CEO and Head of Investments at BNP Paribas Mutual Fund, someone who made a lot of money for his investors in 2017 with the mid-cap basket. Gentlemen, thank you very much for joining me. Hiren, what's niggling the mid-cap so much? Is it pure overvaluation and euphoria of 2017, or is it more these technical issues of the additional surveillance mechanism and stuff like that?
I mean, there could be technical issues, but I think the most important factor is valuations. We saw a record overvaluation of the small and mid cap index to the large cap index in Jan this year, right? I mean, that premium on a trailing PE basis was almost 22%, which I think is probably the highest premium that you would have seen in the last 10 years. Obviously, that premium has come off significantly as many of these stocks have corrected. But I think that the premium still stays, and therefore, while you may find individual stocks where the risk reward may be favorable, but I think overall as a basket, there might be still a little more mean reversion to the mean that might happen over the next few months.
Some more reversion to the mean. Anand Shah also joins in. Anand, the major money that came in last year was from the domestic retail fraternity. What are you noticing at the moment? Is there a lot of redemption pressure coming in from investors that are into these mid-cap funds?
Hi, very good morning. Frankly, so far we haven't seen much of a redemption pressures on our mid-cap funds yet. Nevertheless, as the underperformance has been quite stark and the valuations have come off, as Hiren rightly said, there are ideas which might look good on a bottom-up basis, but we are not getting that flows also because the premium still exists to some extent. Personally, this is the issue as far as the market, the nature of the market itself, that while the previous 4 years we were waiting for earnings, but the earnings were not really as good as one would have liked, but the markets were continuing to do well. Now today as we speak, we are actually getting a good tailwind of earnings. Both large caps and mid caps, we are seeing quite a good traction as far as earnings is concerned, but unfortunately the macros, talk of crude price, talk of interest rates being shooting up, I think that's sort of creating some sort of a scare among the investors. So I think if you ask me, investors who have been long-term investors can still continue to stay invested on these funds.
The buzz in the market, Hiren, is that it is the PMS guys who are washing their hands off after losing rather heavily, not so much the mutual fund investors. Is that right, Hiren, that PMS guys are the ones who are booking out in a hurry?
Well, I can't say for the industry as a whole because each player would be at a different point in time, but I can tell you that at least at Alchemy, we are not seeing any significant redemptions. In fact, we are seeing still net flows coming into us. Okay. But what may be possible is that there might be some realignment of portfolios that might be happening, and that also could be causing pressure, in terms of selling. So, I mean, I think at least, we haven't seen any great redemptions. In fact, we continue to see healthy net flows. We were also sitting on reasonable levels of cash, and we're going to use that cash now to build our positions over the next few months and weeks.
Okay, so when you say build your positions, Hiren, what pockets are you looking at? Because even in this volatile, falling market, there are spaces which are doing extremely well. I mean, consumption, for example, Godrej Consumers is sitting at a new high in a falling market. Are these the spaces that you would look at, consumption, the rural focus plays, tractors, etc., or are there other opportunities now?
No, I think, I mean, again, for us, we are very bottom up, but, you know, we are incrementally putting money equally into large caps as well as some select mid caps. On the mid cap side, we are looking at companies which haven't done much over the last 3-4 years, which means that there was no overvaluation or over participation in those companies, and where we think that the risk reward is favorable. In large caps, I think overall there is opportunity because, you know, on a relative basis, the valuations are still reasonable. And in the early stages of an economic recovery, typically large caps tend to do well. I think my sense is that we are pretty much seeing a little bit of a mini 2013 playing out in the markets. While our macros are nowhere as bad as they were in 2013, but we had some of the same elements of challenging macro in terms of widening deficits. You know, the rupee was weakening, emerging market flows were not so great, and then the small and mid cap stocks were in a risk off mode. So I'm not saying that we are exactly in that kind of a situation, but I think there are some elements that are very typical of what we saw in 2013 that we are seeing now. And my sense is that, you know, after a little bit of more mean reversion, I think there will be value which will emerge in small and mid cap stocks, though they may not immediately give you returns, but with a 2 to 3 year perspective, they might bottom out around September, October time frame.
Okay. Well, coming back to you on the PMS theme in a minute, but Anand, I wanted to ask you if, you know, while speaking to Sonia, you did say that you're not seeing redemptions, but are you seeing lower inflows? Is interest flagging for mid and small cap funds?
Indeed, I mean, the month of June is the first month where actually there has been while the SIP flows are not stopping and they're continuing to get built up because that's a new culture or a new style of investing which has been sort of just started and we believe will sustain. But yes, the lump sum flows into the mid-cap funds have sort of slowed down in the month of June. So June is the first month we are seeing where there's a slowdown on the inflow. So the net inflows are not as great as they were in the previous months. But I won't read too much into it. You know, frankly, we had a tremendous amount of flows into the equity markets. Indian investors got an exposure to the equity markets from practically nothing. I think it can be a consolidation phase. Because why I'm saying that can be consolidation phase and we can see a renewed, because, you know, what we are seeing is today, and if you were to ask me today, more and more companies and more sectors are actually looking quite attractive from a growth perspective, from the earnings perspective. You have at one end the government spending picking up, at the other end from the low base of demon and GST, the discretionary and the staples consumption. We are also looking at farm income improving significantly. So today when I look at bottom up, which was sort of a struggling scenario for the last 4 years, today it's very different. So I think the biggest uncertainty we will have to live with over the next 12 months is the general elections. But beyond that, if I were to look, I think we will have very good earnings traction which will bring back the investors into the market.
Okay, Hiren, just to complete that you know, portfolio guys argument, you know, you all are mature and veteran investors in this space. We saw a lot of new PMS guys emerging in the past 18 to 24 months. You're an industry veteran. Do you think the industry is going to see a little more of PMS outflows in 2018?
So I think, you know, Lata, this happens all the time. I think there is scope for you know, different styles and different approaches to investments. But the fact of the matter is that there are very few portfolio managers who can claim that they have a 15-year plus track record. There are very few of those who have been across cycles. So I think you will see some level of consolidation that will happen in our industry too, as it happens in every industry. And you know, there will emerge a few winners after this consolidation. So I think you know, obviously we saw a mushrooming of portfolio managers in the country, and which is good because you know, it kind of spreads the equity culture far and wide, and I think there is space for different styles of investing. But I think the men and the boys will be separated, usually get separated during tough times.
Okay.
Okay, actually, if I can get a number from you, Anand. Last year, mid-cap index returned 40%. This year, year to date, the mid-cap index is minus 14%. What may the year end look like?
Yeah, I think this is the most difficult question to predict the markets over 6-12 months. But I'm again repeating, and unfortunately, you know, we don't have a number for you. But unlike in the 2013, as Hiren spoke about, I think what I see differently is the earnings growth rate and the pickup in the GDP growth rate. We are looking at significant investments done on infrastructure and a certain reforms being taken place, which has sort of hurt the GDP growth rate in general. The benefits of GST, benefits of various reforms taken place would actually flow in over next few years. So the difference which I see is actually, we actually track a lot of data points and come out with a macro dashboard every you know, fortnightly and monthly. The numbers on ground for vehicles, for cement, for everywhere, we are actually seeing a good traction. So what is different this time, which will then, you know, at some point of time, market will find its levels and will start looking up, is because we'll have a underlying earnings growth rate which will sort of support. Having said that, I will again reiterate that we are going through one of the toughest, or you know, one of the most volatile periods given what's happening globally, as well as we are staring at a general election over the next 12 months.
Okay, just one final question then. You know, I was going through your fund, the BNP Paribas Midcap Fund, and you do have a lot of exposure to some of these rural themes, whether it's M&M Financial, Shriram Transport, AU Small Finance, some chemical companies, etc. Is this the way to progress even through the rest of the year?
I think it's one of the key themes which you know, is displayed into the portfolio, because we believe not apart from only a higher MSP, I think a lot of work has been done on the background, be it farm insurance or be it, you know, scientific way of farming, which has been sort of, you know, pushed and the opening up of the agri market. I think overall we believe concerted efforts to improve the farm income is something which, as we see, is more sustainable than the previous times, and that would help the farm income. But apart from that, there are also you know, beneficiaries of pollution clampdown in China. So you know, that's another theme which is very important, where China, as it grows richer, will clamp down on pollution, will lead to benefits accruing to quite a few manufacturing companies in this country. So farm income doubling is one of the few themes which are displayed in the portfolio.
Fair point. Gentlemen, we could have gone on. We have so many more questions for veterans like you, but have to wind up this. Thank you very much, Hiren and Anand, for joining us in this conversation.